Google stock is down significantly year to date. As you can see, its high for the year was a little over $200. And as of Friday's close of April 4th, it's right around 150, 147 and 74 cents. Today, we're going to use AI to analyze what parts of Google's business is going to get slammed by tariffs if tariffs continue to rise. So a few tools we'll be using. I'll be using Grok and we'll be using ChatGPT. And one thing to note here is using AI to analyze our stock investments. The current AI tools as they exist today are in the worst phase that they will ever be going forward, which means that they'll continue to get better. And our goal on this channel is to follow that journey of AI as it gets better and better at analyzing stocks so that you don't need anyone else's help and you'll be able to do it all yourself, just using AI tools. So let's dive in. So what's the news saying today? It's April 6th. The stock futures are down significantly. This is the Wall Street Journal saying this. What's CNBC saying about this? Dow futures are down by 1,400 points as the market crash collapsed. Now we have to remember that the market is already down 10% into April 6th and tomorrow, April 7th, and it looks like it's going to be down even more. And obviously the market is made up of individual stocks like Google, and Google is one of the most beloved stocks that we have. And Google makes over half of its revenue outside the United States, and it could be significantly impacted by tariffs. And so we want to quickly use AI to determine what we should be doing here. Should we be adding more to our stock positions? Should we be subtracting from our stock positions? Google also has other challenges that they need to deal with, not just tariffs. Tariffs is just the most recent thing that they're dealing with. In fact, we're going to be using AI tools to evaluate Google today. One of the biggest threats to Google's business today is how AI tools continue to evolve and continue to take away from its dominant market share in search. And so let's dive in. The best place for us to start is to start where Google is today, outside of all the noise. Maybe the first few things we'd want to look at is Google's earnings performance, what's its current price to earnings ratio, how it has performed over the last year. Did it grow or did it not grow? What does its free cash flow look like? And we can use our AI tools to get us there pretty quickly. So let's start with Grok and let's prompt Grok. I'm going to say in here, can you give me a summary of what Google's performance has been in the most recent quarter and over the last year? I want to know its price to earnings ratio, its free cash flow growth, its stock performance, as well as what analysts have said about the stock most recently. All right. And then I'm just going to copy and paste this because I'll do this in ChatGPT as well so that you can see how both tools respond. I always click deep search when I'm using Grok, and that way it goes out and it does all the research for you. This is the kind of work that if we were to do ourselves, would take us a lot of time, and you'll see why. So let's click on Grok. Let's see what Grok comes back with. It starts to do its search, and the search is going to take a while here. So it might take, 1 to 2 minutes or maybe more. But you can see it's pulling a bunch of data from a bunch of different websites and basically analyzing it all, and it's going to give us a summary. Now, we obviously don't want to just trust the summary. We want to verify some of the summary, but this is an easy way to get a high-level view of Google's past performance up until this point. You can see here, it's looking at so many different sites, CNBC, Yahoo Finance. It's going everywhere that you might not even think to go. It's a great thing. All right, let's look at what Grok came up with. So it spent about 2 minutes digging through all these resources, and you can see how far it went, right? So a bunch of sources that it looked through, a total of 70 web pages that it evaluated in 2 minutes. Now, if you or I were to do that, it'd probably take us 2 hours, 3 hours to kind of evaluate all the different potential sources that we could get the information from. There's a huge time saver for us, and for as retail investors, we want to get the most information that we can get to evaluate the stocks we own quickly so that we can make decisions. And this is something that we should be doing for each stock that we own on a weekly basis. And the more time that we can save doing it with a tool like this, better it is for us. Again, this is the worst that AI is ever going to be in helping us in our stock evaluation journey. So what does it say about Google? It talks about its price to earnings ratio around 18.11, which for a company that's growing like Google is, it's really good. It grew its free cash flow by about 4.7%. And that doesn't seem like a lot until you realize that they spent a lot of money on CapEx. Google has been spending a lot on AI infrastructure for the future. Analysts believe that their consensus estimate for Google stock is around $210, which is significantly above where it is today, which is around 147. So that could represent an opportunity for it to grow. If the people that spend the most time on the stock think that it should be higher than it is, maybe they're right. So Grok goes into detail. So it starts with the summary and then goes into detail on each of the buckets. This is where the stock is. That's where the price to earnings ratio is at 18.11. The free cash flow growth, $72 billion in cash, in free cash flow, an increase from $69.495 billion from 23 to 24. So represents some growth. And when you incorporate the CapEx, that's a significant bump. Stock price performance is down in that period of time. So free cash flow grew, stock performance is down by 3 percentage points in this time frame. And then it talks about the analyst opinions and, kind of what their average price target ratings are. So this gives you a sense of where Google is today. So we have a growing business that grew free cash flow and where analysts believe the stock should be higher. There's probably some opportunity with the stock to go up from where it is today. So continue to look at this. Q4 revenue was up by 12 percentage points to $96 billion. EPS beat expectations by 2 cents. Net income for the quarter was up more than 28%. So this is a growing, healthy business. One of the things I love about Grok here is it summarizes everything that we just talked about into a table. You could actually tell Grok, hey, Grok, summarize these things into a table and let me know where it is. And it's all here. Price to earnings, free cash flow for each of the years, 24 and 23, where the stock price is today. Is the stock increasing or declining? It has it all here. Analyst ratings, very clear. How many buys, how many holds, no sells. Again, that might be a contra indicator as well. So we have to be careful about that. Sometimes when the analysts love something too much, it might be a contra indicator. This saves us a ton of time. We get a bunch of information all at once here that we can then use to evaluate the stock going forward. Let's look at what ChatGPT came up with using the same exact prompts. I just used the basic function, so you don't have to actually have ChatGPT Plus to get the same value. ChatGPT has a shorter analysis, but it gives us a lot of the same information with some additional things here. So some things that it has here versus Grok, it tells us what the year-over-year growth in Q3 of 2024 was from a revenue perspective. And then it talks about where it came from. So different segments, Google Cloud, we saw revenues rise by 35%. And then it talks about its operating margins. And then it talks about what happened in Q4, which Grok also told us. So 12 percentage points in Q4. Price to earnings, free cash flow. These are some of the same numbers that we had. It talks about the analyst opinions. Has a little bit different number on analyst opinions here. It says 44 analysts, 34 recommending buy, what 10 say you hold. And then the average price target is a little bit higher here. So again, this is where it helps kind of use multiple different tools because they pull different bits of information so you can't fully trust each tool. But at the same time, if you think about it from a human perspective as well, if we were doing this search on our own, we won't find every single analyst and what they said about the stock. So it's not necessarily the case that because this is different than what a different tool pulls that it's incorrect. It just means that they pull differently. It's almost human-like in a way, in the sense that we won't pull everything else. We'll go around and look for what we can find and see what the best, what we can find and make a judgment call. I might give the nudge here to Grok if you look at the number of analysts that Grok provided. So I think it said 55 in its case here. It's saying 44. So we've grounded ourselves in where Google is today. So start to think about tariffs from a first principle perspective. The first question that we might want to really understand is, what are the different segments of Google's business? What percentage of revenue does Google get from each of those segments? And we can then try to figure out which of those segments might be impacted by tariffs and how. So maybe the next question that we ask Grok is, Can you break down Google revenue into each of its respective segments and create a table? Also, research how tariffs might impact each of Google's revenue segments. And then I click enter. He completed the analysis, took it about 2 minutes and 39 seconds to get this analysis done. Let's see what it gives us. It breaks down Google's 2024 revenue of $350 billion into services, cloud, and other bets. So other bets would include things like Waymo and other little investments that Google is making. Relatively little investment. There's nothing little about $1 billion. And it then classifies the Google services segment into several subsegments. There's Google Search, which we're all familiar with, which is the bulk of it, about 200 billion out of 350 billion in revenue. That's definitely more than 50%. YouTube ads, Google Network, and then subscriptions, platform and devices estimated at 43.4 billion. And then it looks at the geographic regions as well. So EMEA, Europe, Middle East, Africa, APAC region, and then other Americas. And then the tariff impacts on the different segments. So it says, okay, what are the likely tariff impacts by segment? So it looks like minimal impact on the Google services segment. So that's good news. And then it looks like Google Cloud, it says evidence leans towards minimal impact. And then we can go into details on what it means by that. And then other bets could face direct impact if tariffs apply to physical products like autonomous vehicles and medical devices. So the tariffs that have been put in place right now, based on the information we have, our physical products that are coming into the US or that are, and for other countries that are leaving the US to go into other countries. Google is primarily a service company. Now, the other bet segment, which we had talked about up here as only having roughly 1.6 billion or roughly 0.5% of total revenue, right? Minimal impact, even if there was 100% tariff on this, on every single dollar that comes in from a revenue perspective here, is $1.6 billion of a $350 billion business. So it does seem like we don't have a lot of tariff impact when we look at it. Again, as we continue to look here, you can see it all broken down into a table, and then the sub segments of Google's revenue down here. I mean, this is really comprehensive stuff, right? And then the sub segments, the percentage of revenue, how it impacts it on the Google services side of things. And so this is just really great to be able to get all this information at your fingertips and know exactly how tariffs could impact any one of these segments, right? And then we look in detail for each region. So this is the second half of it, evaluating tariffs, is looking at revenue by region. So where does Google get most of its revenue from? It gets most of its revenue from the United States. It gets 29% revenue from the EMEA region, gets 16.2% of its revenue from the APAC region. And it then goes in and talks about what are the potential impacts of tariffs on each of these segments. So it talks about direct impacts and then indirect impacts, right? So direct impacts are minimal because Google services are digital and not subject to tariffs on goods. All the tariffs that are currently in place, or most of the tariffs that are currently in place, are on physical goods. That could change here, and that's something to just keep in mind. And then indirect impact of tariffs. So it talks about Meta and Google feel the impact of Chinese tariffs, and in an indirect way. Why? Because these are advertising businesses primarily, and if their customers are feeling the pinch of tariffs on the products that they sell, the availability of capital to invest or of dollars to invest in marketing services, and advertising services, which is what Google provides primarily, and that represents 55% of total revenue. That could be a significant impact because it will impact their customers, which inherently impacts them. So even though it's not a direct impact of tariffs, it could be an indirect impact on tariffs based on what their customers see. US companies might see reduced export revenues. It's potentially cutting back on advertising. But our analysis doesn't end there. There's still more work to do. So the next question we might ask is, this is not the first time that tariffs have been imposed, right? So there have been tariffs over the course of history. And so we might want to know how tariffs have traditionally impacted either Google stock or stocks that's similar to Google. So that might be the next question that we ask is, how have tariffs historically impacted Google stock or other tech stock similar to Google? So we might be able to learn something from the historical impact. Let's evaluate the response here. It says tariffs have caused short-term drops in Google stock during tariff announcements, but long-term performance remains strong. Now, we never take any one statement as gospel, but what you do is you look at the statement in light of all the information, all the research that you've already done to determine, does this align with what I think about how tariffs might or might not impact the stock? It goes on to talk about the historical impact on the stock, on Google stock. So it says Google showed resilience, outperforming the S&P by 31% versus 16% from January 2018 to December 2029. So this was during the US-China trade war back in 2018, 2019. This might be history just repeating itself, and we can look to the past to try and predict what the future might look like. In this case, it looks promising that this might not be a long-term impact, specifically from tariffs. Now, Google has some of its other issues that we can talk about in different videos, but as far as tariffs go, the long-term impact on this might be muted. Well, historical context. So here it shows key events during trade war. So when the announced plans for tariffs were made, when we imposed the tariffs, what did China do? And then it goes through and does an evaluation using trusted tools like Microtrends and Yahoo Finance to determine what happened during those periods of time. In 2018, this is where it closed from where it was. Shows it dropped about 1.26%. The overall market dropped only 0.68%. So it dropped a little bit more than the market did. When China retaliated, the stock dropped another 0.8%, while the market only dropped 0.36%. And then as additional tariffs were imposed, there was a drop of 1.3%. The S&P fell only 0.21%. So the stock tends to do worse when tariffs are imposed than the overall market does. These are short-term reactions because the data shows that Google started at this price in January of 2018, closed at 143 in December of 2019, which is a 31% gain. What did the S&P do in that period of time? Just 16.6%. Now, there's a lot of other things that happened with Google. Google grew significantly in those years, and there are other things that could contribute to this. But we can see that there are potential short-term impacts that could be correlated with tariffs associated with Google stock, but it might not have long-term implications because the tariffs were still in place at the end of December of 2019. So nothing really changed from a tariff perspective, but Google still managed to outperform the market. So on this tariff-specific analysis, it seems like Google does well. So this is a good way to look at things, is now looking at historically what could have happened and what is today, and use that to extrapolate to what the future might look like. No one has a crystal ball, but we just use these tools to give us the best sense of what we should be doing going forward. The trade war is intensifying because other countries have retaliated. The Chinese government has retaliated with an equivalent level of tariffs as well. So we're right in the midst of it. But if past this prologue, this might represent an opportunity. I don't know. It just might. I know that in my case, I'm going to be adding to my Google stock. So do you think tariffs could hurt Google? Is there anything that I might have missed in the analysis? What stock do you think we should evaluate next? Maybe Tesla or Apple? Those could be very interesting ones. Also, I'd love for you to like and subscribe to the channel if you enjoyed this video. And I'm going to be putting together a list of prompts that you can use for your evaluation of stocks, and they'll be in the description below.